What's up, mortgage coach community? Dave Savage, and I am sitting down with someone I wanted to interview. Gosh, I think it's been months, but we've had to reschedule a couple times. Some of it my fault, some of it Chris's fault. But we're sitting down with Chris Hallows. What's up, Chris?
And nothing much, Dave. I'm glad to finally get this nailed down.
Yeah, no, I'm pumped. I think I don't know if this is the second or third time I've interviewed you. Is it the second or third? I know I've interviewed you at least
one of the two. Yeah, second or third. Yeah.
Yeah. Well, for anyone who doesn't know you, if you could just tell a little bit about what market you're in and a little bit about your mortgage practice and how long you've been in the business.
Yeah. So I'm up in the Flagstaff, Arizona market. We are the Arizona where it snows, so don't get us confused with cactus and sand. And so we're a little city of 70,000 people, and I've been in the business for about 12 years, using Mortgage Coach for like the last 6 to 8 of it, and now balancing in the last 2 years, really balancing roles of a top producing team and also branch management. So that's been.
Hey, Chris, we lost you. Yeah, we don't hear you. Not hearing you, man. It was weird. Like you were just talking perfect. Yeah, I see your lips moving. Do you hear me? All right, we resumed the call. We got Chris back on mic. So go ahead with what you were saying, brother.
Yeah, sorry about that, everyone. Traveling a little bit this weekend. I'm up in Flagstaff. I am a producer, top producer of a team, and for the last 2 years, then also managing a branch of additional and kind of region of 8 additional loan officers. So it's been a lot to handle. I couldn't be scaling what we're scaling right now without Mortgage Coach. That's for sure.
So how many loans are you closing on average per month, or what'd you do last month?
So just last month, I don't know the exact units of. Yeah, I should know. It's been a little crazy. But yeah, on average, we're doing 35 loans. Right now, we've been on average in my market. That's we've been on average pretty close to like 9 to 10 million per month, and just my team with them working through branch closing.
Are you going to close 100 million this year? Like, is it looking like you're gonna make it?
That's a silent goal that I was like, it keeps pushing higher. But yeah, right now in pipe is about 83. So unless I take the rest of the year off, I think we might get there.
Yeah. Well, by the way, congratulations. I mean, you've been one of America's top 1% performers for years now, so you're killing it. And congratulations on the leadership opportunity. You're now managing a branch, so congrats on that. It's just cool watching you grow. I remember when you just became a top producer, and now you're going to a whole new level, and you're leading other people. How's that going?
Yeah, it's a lot. It's a lot to take in. Obviously, we're all very, very fortunate to be in the market at this point in time. Can't underscore that enough. So don't want to take too many victory laps. But it's everything that, and I should say and I always, we downplay the quiet moments of pain, and all of a sudden great things are happening. But it's like, all right, sticking through, like learning all the templates, learning the Mortgage Coach, doing that consistently over the years. So now, when I have clients coming to me that I send, one TCA to and come back, 5-minute phone call, we're locked and loaded. They've seen a TCA before because we used on their purchase, their last refinance, the second home. And so now all that investment and effort has put us into a scalable business where I'm seeing my business do right now.
Right on. So let's do this, because I want to hear a couple of things. I'm going to ask you in a minute, how are you balancing refis and realtors? But I think there's people that are watching right now that are either underperforming or they're new to the business. You're still a young guy. What was it in your career where you really went from, I'm struggling, to, okay, I'm a top producer? What was that point where you went from struggler to top producer? Any advice you have for folks?
Yeah. I think, I don't know the timeline of that exactly, but as I think back to that, it really comes down to, I came into it knowing that, I work to try and be someone of integrity as much as I can, to where knowing, hey, I'm not going to walk someone down a path that I haven't walked down, that I haven't anticipated what's around each corner as much as I can. And so just learning the product in the business, the strategies and all that goes into it, so where I could really feel like an advisor. I think that's really where the corner turned to where I was coming from a place of confidence, not from like a hope. I hope we can, I think I can get this done. And I think this is the best strategy, to where I know it's tried, true, tested, and I don't have to second guess it anymore. And then from speaking to my clients, then speaking to my realtor partners, is where that confidence really came from. And really that confidence to where I don't need their business, right? I'm so comfortable that I am coming from a place of value, that I don't need that realtor to be sending the garbage deals to me, or I don't need that client that is going to shop me with 20 different lenders and not recognize the value, to where I think that's that confidence that really helped me turn that corner.
I love that. I love that. Well, let's talk about your mortgage coach story, because I position this as I push it into our Facebook Live channel as how is Chris using mortgage coach to do on average 35 loans a month and be a branch manager in Flagstaff, Arizona. So why mortgage coach? Why did you adopt it, and why do you continue to make it a cornerstone to your mortgage practice?
So definitely coming from a place of efficiency, to where I was actually a mortgage coach hater. I was just actually speaking with several loan officers in my branch this morning, doing a little pushing mortgage coach with them as well, to where I had to admit to them, I was that guy printing off 3 to 4, PDFs, sending them to a client or sharing them, spreading them out, and just thinking, hey, I'm doing so much entering data that it's just more duplication. And so it was me actually taking the time to realize that mortgage coach. I mean, you said it in your interview a week or two ago with Amber. That was an awesome interview, and realizing, I think you've mentioned multiple times in your Jeremy Forcier interviews, to where it saves you time. And so knowing that where I'm at with my mortgage coach today is everyone gets the total cost analysis, every single person. Some of them are requesting multiple, and we're using that in our consultation and back in our constant communication. When I share I do a pre-contract interview, or basically a pre-contract consultation with each client, to where I share it with them, then introduce it to them, then record a video, send it out, give it to the realtor. And then we're using that when the realtor says, hey, can we go buy this property, or what's this going to cost them, or how does this compare to that? We're constantly referencing that as a during sales transaction tool, and then locking it all up. We jump into market rates and points a lot more in depth once they have a contract or moving forward on that refi. So it is a dedicated step of my sales cycle that people now with the refi are coming back and asking for me to show them a refinance based on total cost analysis. So it's really, really cool that we built that culture with that.
Love that. So guys, when he mentioned Amber, he was referring to Amber Kovark. She closed 45 loans last month. I interviewed her a few weeks ago. I'll put a link down below. It's a fantastic top producer interview. I loved her refi versus move up analysis, where she's actually getting folks to go from, oh, should I refi or should I list my home with an agent and buy a move up home? I thought that was pretty slick. Have you done any of those?
Yeah. We've done quite a bit of that as well. And I actually, one of the TCAs I was going to share with you was, you had talked to her about saying, hey, have you done this type of stuff with agents? And we do, one of the big pillars of my business is I do a monthly mastermind, which I have anywhere from 15 to 30 realtor partners in. It's usually a lunch and learn, but now we're a Zoom and learn right now. And actually have been using TCAs in that to help them understand, help them push out to their clients just the magnitude of what we're facing right now as far as the opportunity on either refinance or purchase, to just that no one should have any problems with talking points right now. And we need to help our realtor partners with that. And so I've had some really good feedback on that.
So dude, I just thought of the name. When we promote this interview, it's going to be Zoom and Learn with Chris Hallows. So I love that.
I like it.
Forget about lunch and learn. Let's Zoom and Learn.
Yeah.
So I love that. Zoom and Learn with Realtors.
Yep.
So let's do that. Like when you show your TCA often, when I have someone show up and pull a total cost analysis up, it's, hey, walk us through how you would share this to a borrower. I want you to like pull up whatever total cost analysis you want, like share your screen, and then walk through it like you're doing a Zoom and Learn with agents. I think that would be interesting. If you think you can do that. So by the way, guys, Chris is coming to us live out of an Airbnb. This is not his normal office or home office. He's he's a gamer, man. We rescheduled this a bunch of times. He's on a little weekend adventure or whatever, a week adventure with his family. Where are you at, by the way? What part of the country?
So we're up in Deer Valley, Utah, doing some mountain biking with the kids. They're upstairs doing their online school because our schools are online still. So we're all just decided, hey, if we're all going to be remote, we might as well be remote somewhere a little bit different, change of pace and scenery here. So we'll be up on the mountain riding tomorrow and the rest of the week here.
So guys, check that out. That's another really cool story and just a good reminder to all of us. When I interviewed Amber, and the month she closed 45 loans, mother of two, she was actually I think 45 days before that, she was at her dad's mountain house in North Carolina, in the mountains. And so that's the really cool thing right now. Here she is. She's in Chandler, Arizona, closing 45 loans, but she's with her family before school started, doing life with her dad's property in North Carolina. And here you are. How long are you guys in Deer Valley for?
Through Labor Day.
Oh, yeah. Dude, I love hearing stories like that. Now that's another life balance, and then leveraging the virtual tools that we have like Zoom to do life and also do lifestyle. So.
Yeah. There's a lot of things that were in your last interviews. I'm sure you've been talking a lot about that, and I don't know. I was the guy that met with 70% of my clients in person, and now I'm like 5%, and I like that. And the same time constraints play into it, but the life flexibilities like we're doing now, because I would feel really guilty because a lot of those same clients would want to be with me in person today, but they're going to be over the phone, and they prefer it because they're safe and I'm safe. So I don't know, Dave. We're going to be.
You're not going back to 75% in person, I take it.
No, I don't think I will, but I think the key to it, at least my takeaway right now, is going to be that the mentality of a lot of people is going to shift. And what I'm going to do is to continue to give people the option. So I think more people may be comfortable down the road, but I see a lot of people being more comfortable with the digital and the Zoom. And because of, we have a lot of second home market in my market as well. So I felt like I really needed to have, early on, years and years ago, I felt like I needed to have a very strong presence because it was that same second home buyer that was coming into my market from California or Phoenix that would be very less loyal to me and more shopper-esque. So I felt like I needed to have a strong presence that way as well. And so it's something that, I've used Mortgage Coach years ago to build that out. We're now capitalizing on and using that. It's not been a difference. We didn't stop and have to say, hey, how do we do that consultation over the phone? We already knew how.
Sweet. Well, pull up your screen. Go ahead and share on Zoom your screen. And then once I see what you have on your desktop, I'll decide what to walk us through first. Are you going to start in a consumer experience, or?
Do you want to do consumer or the realtor?
Well, yeah, let's do the realtor. But I was actually talking about our advice engine. Where you actually create the total cost analysis. That is a question I have. Are you creating all the TCAs, or do you have someone on your team doing it?
Excellent question. So I have my team. So we're doing that about 35 units a month right now with a 2-assistant team. I have a front end assistant that works on it from start to contract, or inception to refinance confirmation that moving forward. And then a back end assistant that's contract to close. And so my front end assistant is doing 100% of the purchase TCAs for me. And then helping out on maybe about 10, 20% of the refinance, where I'm kind of handling most of the refinance TCAs and just pumping those out. And with the volume we're doing, kind of separating those duties there, but that's what we're doing.
Yeah, I think that I didn't ask that question that way with Amber, but she was saying, I'm doing the refis after my kids go to bed at home and putting a video on it. So I'm pretty sure she was doing her refis. And then I'm pretty sure she's got a front end assistant doing her purchase TCA. So cool.
Yeah.
All right, so what are we looking at? And let's assume you're going to be sharing this at a Zoom and Learn with a bunch of agents.
Okay, so this is the Zoom and Learn. Let me get you back on the Zoom and Learn here. If internet will cooperate here. Let me actually.
Guys, if you have questions, if you're in Facebook, put your questions in comments. Notice that that's the advice engine. In the upper right-hand corner, you can see record video. He could add a video to it. He could go preview and live. And it looks like right now he's going live. So think about this, guys. He's got a bunch of realtors on Zoom. he's putting the link. Are you putting the link in chat, or do they have the link in advance?
So what I did in this round is I put the link in my PowerPoint presentation that I shared with them, is that and then jumped into it in a live Zoom, and then I actually sent it all out to them, and the link out to them after. I always kind of send my goodies, like some case, keeping current matters slides, and my TCA links and his email afterwards to
Would
all the
you
realtors.
would you be cool? I know some people are going to ask for maybe your slides and a sample of that. Is that something you'd be willing to share?
Sure. Yeah.
Okay. So guys, keep an eye out for that down below. If you're watching this in YouTube, in the show notes below, like description below, I'll have a link to his PowerPoint, and you can get a feel for the full Realtor Zoom and Learn. Okay,
Definitely.
go ahead.
Definitely. So this, what we're looking at here, and I shared this 2 months ago. So it was the July Mastermind that we shared this. You can see the quote date. I'm always really good about my quote dates, just so no one can come back to me and say, you said this, because I always make sure my dates are up to date there. So what we had shared then is kind of talking through, okay, the average client that went and bought a home at 5% down in our market, a year or about 4 years ago, we put it, right? Because one of the things that I want to focus on, and I've been focusing on it several years with my age, the last couple of years, since the number one problem in our market has been inventory. And so I've been really focusing with them on saying, how do we create inventory and help that move up buyer? And well, I mean, the move up buyer is the key, right? You create the inventory by finding that person that needs to sell a home, has a desire. So you get their listing and you get them into the next home. And so that's where the whole idea here then is we built out, this is where they're currently at. They probably bought around the mid fours, payments around $2,000 a month in our market. And if they did a 30 or 15-year refinance, we showed the massive monetary savings that they'd be experiencing on just a monthly basis. I love going down into the blue bars there to quantify that for them, that they're really not paying too much more on a 15-year, and they're gobs of savings. And there's just so many different things that they could talk to their clients on the use. And that's where I love it to be personal, right? Because they know their clients to be able to say, hey, I know you got those kids' college funds that you need to be working on and chunking away at. That's where that money goes. Or I know you've always talked about building that business, or whatever they want to use it for. That's where you get personal, right? And then and jumping into the orange bars, and I make a ton of decisions with clients in the orange bars to show them that, hey, your savings, if they're refinance, bottom line, that's an easy no-brainer. The realtors should be talking to every single client they have ever sold, and they complain about it, right? But let's be honest, for us to make the same kind of money as a real estate agent, we have to be scaling way more closings per year. So, I mean, your average realtor is not doing the triple digit type of closings that mortgage top producers are. And so that's where the refi, we just push, you should be talking to every client. And then the move up though, that's where we say, okay, if they moved up last year versus this year, and gave them some context and just some different interest rate comparisons. What was really cool in the takeaway, where I had a lot of agents' jaws drop, is just seeing the sheer rate value and saying they're going to have the same monthly payment and go ahead and buy a house that's $150,000 more than, or sorry, $250,000 more than their current home, have the same monthly payment. And if we show the orange bars, they're no worse off. They're actually slightly better off in that move up home because of the taking advantage of the timing now. So really, if they have a housing need at some point in the next 5 years, it's better to fulfill it now. It's going to be cutthroat in the market and inventory and everything, but better to fulfill that need now with rates versus later. And so making financial sense of that move up is, we of course made some assumptions on value and equity and some things there. But a lot of realtors are really impressed with saying, okay, now, wow, I need to share this with my clients, and I need to have them come talk to you.
Yeah, no, I think it's so fun. I love these interviews because, first of all, when I did Amber's interview and she showed hers, I'd never seen that before. And I'm like, what a slick idea. And I'd never seen this. Like, I've seen the cost of waiting analysis where it's like buy now or wait, but the way you wove it into, hey, I'm having a refi conversation, and 30-year, 15-year, and then, hey, what about if you would have moved up last year, it would have looked like this, but if you move up this year, I mean, that's education. I mean, that's every realtor is going to go, wow, I never thought of it like that. Whether they say that out loud or they say it to themselves, they did not do that. So real quick, I'm going to let you get locked and loaded for your next one. I do want to share, just to make sure everybody, this is just such an important question that I want to remind everybody on this call. Make sure you're asking all of your refis. Is this house still working for you right now? You know, it was a takeaway from my interview with Amber. Chris, are you doing that? Are you asking a version of this question of your refis?
Yeah, my version is, well, I always jump into refi. Okay, before we start talking the refi, is this a 3 to 5 year home, 5 to 10, 10 plus? Is the house still meeting your needs?
You still there? I lost you.
Oh, yep. Can you hear me, Dave?
Okay, cool. I got you. So cool. So ask that question. And then guys, here's the deal. Like, this is one particular success story where they current loan, this is what they're currently in. They could have saved $322. The family had decided they wanted another room. And here's the way to get out, guys. You know, and this is another thing, like, I believe in, let's have some slides and then let's show some live product. So maybe you net it out with some slides. You could move up and your payment would go up $500 with a 5% down. Or you could move up, and then when you sell your home, you can take your equity, in this case it was $125,000, recast the loan and actually lower your monthly payment. And or you could, when you sell that home, put that money in the bank in an interest-bearing account. And that's what this family decided to do. And check it out, guys. The family was able to improve their cash by 50%, improve their net worth by 60%, get their dream home. And here's the beauty, guys. Realtor gets a listing, Realtor gets a move up. So like if you were doing a Zoom and Learn right now, you could go from a couple slides to net it out, and then you could pull up the TCA and you could say, now guys, I can do this for your families. So based off of their equity, based off of the rates on the day they want to talk to me, based off of their belief as to what things are going to appreciate at, let me do one of these move up analysis for all your clients. So I think I like what you're doing. And then I think kind of adding some nuances to what Amber's doing, I think would be powerful. So,
Oh yeah. And the recast aspect, we're seeing a lot of that to highlight that as far as, you know, we're at hot markets, no one wants to see contingencies. So we're very frequently adding that recast aspect in, and people don't know about it. People aren't talking about it. It makes you look, yeah, it's in the Dave Savage words, a ninja move right there is the recast.
I like that. I like that. So let's do one more TCA. So if you could share your screen one more time. And then Chris, I can tell already when you're back in the office, I want to have you as a guest and just do the full Zoom and Learn. I want to just tell that whole story. How do you invite the realtors to it? What slides are you using? And just kind of do a Zoom and Learn in a box if you're cool with it.
Oh, for sure. It's been, and the consistency that we've done that in has kept us as much as we can be, you know, very purchase focused during this refi boom. So that's been big. Love to do it.
Cool. So what are we looking at here? What's the story and what's the strategy?
So this fairly simple here as far as, you know, client comes into our door wanting to consolidate a little bit of debt, right? So I just figured we share one with you where we go a little bit bigger than what they had chatted on, to where they want to do a little bit of home renovation. And so we have their current loan that they were at a 4.125 on and had bought several years back. They had just talked about taking $50,000 out, but we scaled it up to be just showing the differences on a 20 and 30 year if they would go to a full 80, taking about $81,000 out, which killed all their consumer debt. They weren't even thinking of a bunch of cards that they just thought, hey, we'll just slowly continue to pay those. But what this net did, so we were looking at about $130 on the 15 year, on the 30 year, $130 more per month. And it eliminated over, it was about $800 to $1,000 of consumer debt payment that this client was paying and didn't even think that they could roll that in. And so, we net benefited that client by $800 a month, put a new roof on their house, was able to finish renovations, and killed our consumer debt. So this was huge for them.
Well, let's play that forward. Let's scroll down a little bit, because here's the deal, guys. This is the difference between a loan officer and a mortgage advisor. He's showing options. So he's comparing different strategies, and then he's blowing it up over time. He's showing it over different windows of time, which I'm assuming this is what was relevant to the client. Like they wanted to see it over 60 months. You didn't just make up 60 months.
Well, generically, and we're using, that is the default for Mortgage Coach, right? And so a lot of times we're now, and I would say in these refinance consultations and in this, we jumped in and probably put the orange bars at 4 to 5 different points and then went back to default, right? So a lot of times I'm showing, hey, break even, you're coming even on this refinance right now. Some of them are within, 6 to 12 months, and then jumping out to the 10-year point, the 15-year point. So we are often playing with those orange bars and then sometimes reverting them back to a default there. But yeah, that was ultimately, what we couldn't then entirely show then here is all the interest saved in those payments that we just eliminated for them, which again was about $800 to $1,000 worth of monthly consumer debt.
Yeah, and guys, he has it set up to default. Scroll down again. It looks like 60 months. And what's the long term at 15 years? You could set up the defaults for whatever you want. And then I recommend that as you're talking to the family, you're finding out what are the windows of time that matter to them. So real quick, before we finish up, go to the advice engine, where you create the TCA. We call that the advice engine. Here we go. I want to remind folks,
Do you want me to jump in that client?
Let's do something different. Okay, go back. Yeah, I just want to remind folks, you can add a video in the upper right-hand corner, whether it's adding it from your mobile phone, you can do live. Click on settings real quick. Also want to remind folks, guys, we take white belt loan officers and we turn you, in Chris's case, look at that. He's created 3,202 TCAs. And don't click on your red belt, but put your mouse on the red belt without clicking on it. And then just to the right of that, there's a little box with an arrow pointing out of it where it says TCAs created, and there's a little arrow with a box with an arrow. Click on that box with an arrow. So guys, we take you from white belt to orange belt, 20 TCAs, to blue belt, 50, brown belt, 100, black belt, 300. And of course, when you've done a mortgage coach 1,000 times, Chris, you mentioned earlier in the call, there was a point where you just had a new level of confidence. Where do you think that was? What belt did you need to become to have that level of confidence?
Gosh, that's a good question. I actually was funny because I saw that, I think what'd you do the badges like a year ago or so? And I jumped on there. I was like, oh, I wonder what badge I am. And I was already at that red belt, but I hadn't looked back at this until you had chatted with Amber about it. And then I was blown away by looking at that. And the views was what I hadn't seen. And seeing 16,000 views. I mean, I'm no way, shape, or form a YouTube viral sensation there, but to say that an average of 5 views for 3,200 clients is massive. And so I'd say, somewhere along that.
Click that X. I want to see what your views are at. Because Amber did. Oh yeah, look at that, guys. So 16,000. And guys, think about it. That's a husband. That's a wife. That's a father-in-law. That's a buddy who's a real estate investor. That's a realtor. That's a financial planner. That's a CPA. That's 16,000 different times a client has clicked on a mortgage coach report. I mean, that should be enough reason why you should use mortgage coach, because it amplifies your brand. It amplifies your impact. And so that's a really good point, brother.
Yeah, well, and I think you brought up on the previous calls as well with Amber that not only is it those other people looking at the report, but it's that 5-10 phone calls I don't have to have again and again and again, because they have it in the video on what's the principal and interest payment, and they can watch that over and over and over again. And so the time scale is huge, the time savings. And I think, like we said at the very first, that I was took me some time to buy in, but I would say that get back to the original question there. Somewhere probably around, 200 to 300 TCAs was really where I started to feel that confident shift, because it was, it was a learning piece back and forth on this day, which was really cool. Is because I started looking at mortgages differently because of Mortgage Coach. and how can I kind of game it and gamify just like you've done it now to where, hey, what if I punch in this number or that number? And oftentimes with the client, like they'll ask me, well, Chris, what about this? I'm like, oh, I didn't even think about that. Let's put it in. And I tell them it's live TV when they're looking at that TCA on the phone with me. I tell them it's live TV. I don't know if that's going to even look good or not. And sometimes it doesn't, sometimes it does. And so that's where Mortgage Coach has helped me evolve in that confidence level and really learning how the structure of that 30-year fixed amortization or 15-year fixed amortization can be gained.
I love it, man. Well, dude, this has been such an awesome conversation. I am looking forward to having just laser focused on Zoom and Learn with agents and going through your full process. Mortgage Coach community, if you have questions for Chris, put them down below. If there's something you want me to ask next time I ask him, I'm going to give you the last words, Chris. Although before I give you the last words, if you got value from this, give it a like, share it with your mortgage friends. But in a minute or less, if there's someone listening to the call and they haven't used Mortgage Coach, what's your, hey, to the loan officers in your branch that aren't doing it, to the loan officers that aren't, give them a push.
Yeah, and my branch makes fun of me because I tried to find a tagline, we end meetings with, find a tagline, and I'm still trying to come into it. But what I've been trying to use is stay humble, stay hungry. And I think that's so applicable right now with it is busy times, but we really need to not get ahead of ourselves, not think too much of ourselves, and just really be focused on the good that we can create out there, and trying to learn new ways on projecting that and doing it efficiently. And so that's where, to the loan officer that wants to up their game and wants to do it efficiently and really at the end of the day, and I think when I emailed you, and I had emailed you a thank you just because I'm like, hey, I'm having 5-minute conversations with clients because I can't have longer with some of these refinance clients, but because they know the TCA, because they understand the TCA, I can sleep at night knowing that they've seen their options, they're confident in the step forward, we're on the same page moving forward, and that client feels trust in me. And it's all because of that TCA and the relationship that I generated with them. So stay humble and stay hungry.
Love that. It's been an awesome call, brother. Really appreciate you, man.
All right. Thanks, Dave.